On this evening's program, really big news. Google up huge. That quieted fears about their ad revenues. It ought to be great news for tomorrow's stock market opening. And meanwhile, stocks were flat. But as our Don Luskin wrote today, 1 month later, the Bear Stearns bottom is holding up nicely. And let me repeat, the Fed should not cut rates later this month, maybe not again in my lifetime, and they and the Treasury should turn the U.S. peso back into the dollar. The valuation of Treasuries, who is right, Google or Joe Livornia, and what do you make of these better earnings announcements, eBay, IBM, Intel, and Google? I mean, to some extent, they've been driving the market forward and are very consistent with your theme of the bottom a month ago with the Bear Stearns crack up.
Look, you just have to believe. You know, Maya Angelou has this great saying, when people tell you who they really are, believe them.
She's the poet, right?
That's right. She is a poet. We can learn from poets on Wall Street. Intel, IBM, Google, they are telling us that there simply is not a collapse into U.S. recession or global recession or IT recession or anything else. Everyone had a nice little scare with General Electric because General Electric is not really an industrial, it's a financial company. That's where essentially all its problems came from. Everybody was shocked because they didn't warn, and they've got this goody-two-shoes governance system that's supposed to make them warn, and they didn't, so that's a problem. Everybody's just scared. The reality is that we have not been in a recession. We're in a slowdown. We are not going into a recession. There's almost no evidence that we're going into a recession.
What about the Philly Fed number today?
That was a bad one, but compare that to the Empire State number yesterday, the exact opposite.
I don't know how they measure the Empire State thing, Don. We don't have any manufacturing in New York. We haven't had manufacturing here for 50 years.
I know, but what little manufacturing there is doing really great, Larry.
What about the last
I've been patient here. Let me get in one more important word.
You have.
I am coming to you from Silicon Valley, the home of Google, and I just want to tell you that it's very easy for people on the East Coast to come on your show and talk all the time about housing and how it's going to hurt the consumer and wealth effects. Let me tell you a little bit something about wealth effects. You just go down and you visit Google's headquarters. If you can find Google's headquarters, they've got like 125 buildings within 5 miles of me. They used to have none. This is gigantic growth. This is creative destruction. It's entrepreneurship on a vast scale. It's happening right here in this country in our lifetimes. And I'm not worried about my home value because I know that the marginal buyer of my home is a Google millionaire. And today's news just confirms that. Don has to go a few hundred miles
south. That's the problem.
Listen,
he's in the one area where the California market's held
you're
out.
out there counting GDP. Don Luskin's counting real wealth creation.
There you go.
Google.
Well, real wealth.
That strikes me.
Larry,
as polar
why focus on just the stuff that's bad? There's good stuff too.
That's true, Don. That's a fair point.
Don Luskin, I want to say something good about Senator Clinton because, you know, compared to what? Well, Obama wants to take the capital gains tax to 28. Mrs. Clinton only wants to take it to 20. Therefore, Mrs. Clinton is the supply-sider in the Democratic race.
Well, I have to say, I was just horrified by what Obama said last night. The moderator, Charlie Gibson, said straight to him, every time you raise the cap gains tax, the Treasury loses revenues from the tax hike. Anytime you cut the capital gains tax, the Treasury gets increased revenues. So it is a case where supply-side economics works. Now, Obama didn't disagree with that. He accepted what moderator Charlie Gibson said and then turned right around and said, well, it's a question of fairness. So in other words, he doesn't care if it costs the Treasury money. He doesn't care what that costs someone else in the economy who have to be taxed higher to make up for the revenue loser he's going to put in place for the sake of his sense of social engineering.
Look, that is the platform of Senator Obama. Let's be honest about
this. There's one word for it, socialism.
Yes, he wants income redistribution ahead of economic growth.
Let me hit this fairness question that Obama brought up because it drives me crazy. In 2005, 8.5 million taxpayers declared capital gains. 80% of them had income of under $100,000, which to many people is good income, but it's not the province of the rich. So to say you're going to be fair, you're going to take 80% of the people that declare capital gains who are not in the rich category, and that just drives me crazy that they talk
but
that way.
even if we were talking about the super rich, why is it fair to attack them? Are they criminals?
No,
they need to be punished?
But
I don't know. I mean, I think I'm pretty rich, and I've earned every damn penny.
You know, Don Luskin, we got to go out here. We'll come right back. But a fireman and a school teacher will make here in New York City easily combined income, married, filing jointly, 150, 175, maybe 200 grand. A fireman and a school teacher. That is how stupid this Obama idea is. Hang on, Luskin, you've turned soft on inflation.
I have. I think, the statistics look bad, but the statistics are lagging. The statistics are reflecting the sins of the Fed over the last 6 to 18 months. I think the Fed has stopped sinning. You look now at the futures markets on the Fed funds futures, and what you see we now have discounting for a better than 50% possibility of a rate hike a year from now. So that's coming onto the horizon. The Fed is going to start tightening sooner than anybody thinks. It won't be tightening in a bad sense. It'll be equilibrating, normalizing. It'll be a wonderful, wonderful thing. The sooner the better.
But Don, if they were capable of reversing what they've done so far, don't you think they would have tried that already?
No. Oh my goodness. Oh my goodness.
Don,
Please,
wait, let me
please.
We had a collapse of the housing market.
Almost ended.
Can I make my point, please,
Don?
Don?
Make your point, please.
Make my point real quick. Is that we tried it already. We tried to reverse the interest rate trend. We raised rates to 5 1/4. The economy started to collapse. The housing market collapsed, and we quickly reversed course. Now we're back going to 2%. The Fed funds futures market predict a possible 50% rate cut at the next meeting. So how could you look out a year? They don't know what they're going to do in a year, and you know that, Don.
Well, the futures, in fact, are predicting only about a 15% chance of that.
50 basis points. A quarter is baked in the cake.
Yeah, exactly. So they're
what
not.
direction is that?
There is no reason whatsoever to think there's going to be a 50
yes or no.
point chance.
This is an interesting. We got to get out of here, but just on the way out, everybody whip around. Don Luskin, what's this? The Fed meeting's April 30th, if I'm not mistaken.
Yep.
What are the odds that they do nothing, and at the same time the Treasury actively intervenes to defend the dollar? What are the odds? Let's say on a scale of 1 to 10.
Well, both those things jointly 0, because the Treasury's not going to do anything.
Jim